A little bit cleaner.
Mm.
Hello, and welcome to another episode of Get Your Fill, Financial Independence and Long Life, where we explore ways to achieve those two goals. And folks come on to help us do that. Like today, Patrick Grimes. He is going to help us to save money on our taxes, diversify our portfolios, and really kick it, and so we can relax and enjoy our life at the ocean the way he's doing. Patrick is the founder and CEO at Invest on Main Street, which is a private equity firm. Their mission is to enhance busy professionals' quality of life by providing tax shielded and inflation hedged passive income and wealth building investments. He's got tons of experience, and he has co-authored an Amazon best-selling book, which he's going to give to us today, Persistence, Pivots, and Game Changers. And he writes for Forbes. He's an awesome guy with tons of knowledge. Patrick, thanks so much for being with us today.
I appreciate the great intro, Christine. Looking forward to our chat.
Me too. So, Patrick, how did you get started in this? Has this always been your thing, or did you kind of find your way here?
Well, so I started out mechanical engineer, machine design, automation, and robotics. Got some advice early on not to invest everything in this high-tech roller coaster world that I was in, but it's a lot of fun, but put your stock into real estate. So I did some investments really early on, trying to double, triple my money like a young whippersnapper does. And I lost it all through 9-10, personally guaranteed it, and really risky kind of pre-development stuff, right? But then I learned through that process a lot. I got a master's in engineering and in business, did well in automation and robotics coming out of that. Started investing again, but in recession-resilient markets and recession-resilient asset classes. And it grew from there, from single family to large-scale multifamily. And then I diversified into other investments like diversified energy portfolios and natural gas and oil and stuff like that. So
it's kind of unusual for people. Well, I don't know who you were talking to, but ordinarily, when you think about people giving you financial advice, they tend to sort of focus on, go, get your IRA and your 401k and buy lots of stocks and bonds, and people invest in their own company's stock. How did you, who was it? Or, yeah. Okay.
Yeah. So it is crazy, right? Because I was in the high tech space where most of the individuals are working 80-hour weeks, doing everything they can to try and get a startup or ride the corporate ladder up, taking a lot in stocks and hoping that they have a sale event or something like that where they go public. And a lot of the smartest people that I know, where I was doing projects, one-of-a-kind automation equipment, manufacturing automation in medical device companies like BD and Johnson & Johnson, aerospace, defense like Lockheed, SpaceX, and Tesla, like really smart people putting all their stock in traditional investments and their company's stock. And unfortunately, those vehicles are usually very few people make it out, or they work until they die, right? And it's so hard because the whole system is kind of rigged. They tell you to just throw it into the 401k and IRA. The financial planners, if you graduate to that point, just put you into more index funds in the market. And so what they don't know is you can self-direct those funds. Or they go try and buy a property themselves, and they're like me, where I was slaving away, trying to do the single family rental thing, trading time from my family, friends, and hobbies, when I had a high income earning job and I could just invest passively, but I just didn't know that those investment vehicles were out there. And so that's what I'm trying to do now, is trying to let people know about that, trying to get the word out that they have the opportunity to invest in alternative investments passively, and then go enjoy their lives.
So let's talk some more about that, because I don't think a lot of people realize that they can use the money that they've been saving in their 401k or their IRA, for example, and do something other than buy stocks with it.
Yeah. So actually, Patrick Grimes, Forbes, IRA 401k, if you Google search that, you'll see articles I've written in Forbes on that topic and a dozen others. But yeah, and they're not gonna tell you that, because they get paid, the custodians, by the fees they make on the money that they keep in the qualified plans that they manage. And they're just trying to keep those custodians and financial managers trying to keep food on their family's table. And so they're following the policies. The reality is there's 20 some companies we work with on the regular that you can take a piece of your 401k or IRA and roll it over to a self-directed variation of that plan. And the government allows you to directly invest in real property, right? They allow you to directly invest into oil and gas deals so you can get the tax advantages, the long-term appreciation and cash flow, and real estate and real property. So you can invest in large apartment buildings like we do, self-storage, give us all kinds of things, and not have to put all your stake in the roller coaster of the stock market.
But I think the case with that, though, is to your earlier point where you were slaving away with your own rental property, is that the person whose IRA it is, they can't actually manage that property. Is that correct?
Well, so yeah, you need to have kind of arm's length transaction.
Right. Yeah.
Yeah. So you can, if there are people that go buy rental properties, but they can't participate in, they can't live in it. They can't use it as a vacation rental if it's a vacation rental. And you definitely want to get a property manager in those cases. But to really scale, you can carve out a piece of it and invest it passively into a large apartment building in a syndication like us, where we pool investors' capital and we'll take down large buildings where you don't have to manage, right? Because you're not going to find the deals we find. We've got decades of experience, right? You're not going to be able to manage them like we do. And you're not going to be able to roll it over and take advantage of the economy of scale that we can. And ultimately, if you're really good at what you do and you have a high income earning job like I did, it's really easy to fall into the trap of wanting to be the expert in your investment portfolio and to manage it all yourself. Meanwhile, what that meant, I didn't get married until I was 35 because I was
too busy.
I was moonlighting my investment portfolio, right? And I mean, I was doing really well and things were working. And that's what was hard, is that they were working, but they weren't working for me. I was working for it. It wasn't until I partnered and scaled into larger securities into energy and multifamily that I got free of it, free even of my day job. Yeah. And now we moved to Hawaii for COVID. I mean, it's like we have a lot of freedoms now that we didn't otherwise when I was trying to control it all and do it all myself.
Yeah. But how do you gain that element of trust that the people who you're handing your money to are going to do as good of a job managing it as you did? Mm-hmm. Or potentially, hopefully better.
Yeah. And I get those questions all the time because the tendency for doctors and attorneys and chief officers, entrepreneurs are really to just control it all. And, that leads to kind of doing things half-assed because you don't have a lot of time, right? And so how do you partner with people? It took me actually, so when I decided to trade from single family to multi, it actually took 2.5 years. 2.5 years where I said to my wife, hey, I'm not going to do single family anymore. And she was there for my very last one. We actually got married. And then I told her I was going to go do larger multi. So it was like 5 years between the two. I traveled a lot. I learned I did a bunch of different programs, learning all kinds of investments. I have 2 master's degrees, so I tend to learn a lot, right? And I met a bunch of people. I was like, oh yeah, these are going to be my partners. They're in these locations. They're not in California where I am. They're out in these markets where it's landlord friendly. Mm-hmm. It does well in recessions. It's recession resilient. It's tax friendly. And so a bunch of people are moving there, right? And I want to be in a growth market that wants me to be there, that'll allow me to raise rents and evict if I need to and stuff like that. Yeah. So that's not near me, but I need to partner with somebody out there. It took a long time, about 2.5 years before, and probably a dozen different people that I had met with and worked with and analyzed deals and walked hundreds of units, before finally everything lined up. My conservatism, having lost it all one time, and I wanted to be the tortoise and not the hare. Yeah. Somebody who could look at this and say, you know what, let's project this returns. Even if we have another 2009 and 10, let's just project the returns so that we know we can meet it, even if that happens. Let's structure it so we can survive another recession, and let's find investors that are okay with a little bit lower return. Projected knowing that if everything goes right, we're going to knock their socks off, right?
Right. Exactly.
But let's find the right kind of like-minded people. Let's not fall into the trap of trying to have the highest yielding deal and risking it all like I did back when I was doing pre-development single family. And I finally found that person. It took a long time. It was a lot of time through the trenches. Now, that was because I was trying to be active. From a passive perspective, it's not that hard. From a passive perspective, first of all, you got to get, like, you can reach out to me and I can get you exposed. There's track records, there's investor testimonies. You can listen to the webinars that we have. We've got articles about how to vet sponsors and how to vet deals and how to choose your investments. And so you just got to get into the space, subscribe to like my list, and I can point you to some others. And you'll eventually learn to become more and more comfortable with the groups and our track records and what we can make happen for you while you go enjoy your life. And so just takes time and effort.
Yeah. No, that's great advice. Let's talk a little bit about the energy investments that you're doing, that you're working on.
Well, so I started building up a portfolio where I'm co-managing on the general partner side now, over 500 million in apartment buildings in the southeastern states and a couple in the Midwest. Diversified portfolio, but mostly 2 to 300 unit, 20 to 50-year-old properties where we can buy them distressed and renovate. Right, nothing new, flashy. Like I said, I'm not new and sexy. I'm old school, tried and true cash flow guy. But it's something that needs fixing up. And so I started doing this over and over and over, rinse and repeat. What system works? But then we started hitting this potential recession coming up here. And I started looking like, you know what? Most of my investors are heavily indexed in real estate. Either they're not at all, they're only in the stock market saying, I need to get diversified, so let's do real estate. Or they're like, I'm diversified, and they're just in a bunch of different kinds of real estate. They're in like mobile home parks, self-storage, multifamily, single family, Airbnb, assisted living. And I'm like, well, that's all one correlated asset, actually.
Right.
And I started realizing that me and my investing buddies, we're actually investing in all kinds of things. We trade these alternative investments where real estate is one of them. We trade them like baseball cards, like with the groups, And so I started saying, look, non-correlated investment means where are you investing where it's not on the same market cycle? And if all your investments are in the stock market and in real estate, well, you may just be into investment cycles. What happens when they're both down? Like today, right? Where it's really hard. I mean, right now stocks are down. It's really hard in real estate to find great deals.
Yeah.
And we're in the middle of a correction, and which is okay because that's how our deals are under. But wouldn't it be great to invest in a completely different market where we're on a super cycle, where it's appreciating, where politically and internationally pressures have tailwinds to push us forward, right? Where the tide's not lowering, where we're preserving capital, but the tide's lifting, right? And so those are just like how people in the stock market have to struggle a little bit to get into real estate because they're not the experts. Well, turns out these other investments that have different fundamentals that are also essential needs, like housing, food, and energy. The government incentivizes us to house, feed, and energize, right? Well, those are there, but they're completely different. So now you're like, Patrick, wait, I just got comfortable with real estate. Now I need to invest somewhere else. Well, it's not that natural gas and oil, which is an essential need in our country. It's not that that's the lower risk deal. It's that your portfolio is lower risk through diversifying into these, what are they called, non-correlated, or assets that don't rise and fall together. The diversified energy fund approach applies real estate principles to what can be a volatile and risky investment, but through our applying scale, diversification, and buying secured assets by putting these basic real estate principles applied to like the old boring way, I call it, with this new fund model. I just did a presentation on that in Houston. You can energize your portfolio in a way that is lower risk and but take advantage of like incredible tax advantages where, like in real estate, you invest 100 grand, you can't really take the depreciation in the first year. Like if you invest 100,000 in our deal in real estate, we'll give you like a 70% paper loss, and that'll carry forward so your cash flow is not, you don't pay taxes on cash flow. Well, that's really cool. If you're an attorney or a high paid income earner, like a lot of our investors, but you're paying a lot of taxes on your W-2 income, your K-1, your 1099. If you invest 100 grand into the energy portfolio, we'll pass through a 75% paper loss, but you can actually offset your normal ordinary income with that. So that's like a game changer. It's like, wait a minute, if I invest in real estate, I got to save up 100,000. If I invest 100,000, I still have to pay 30,000 in taxes because I just invested. So I actually have 130,000 in order to invest 100,000 in real estate. Over on the diversified energy fund, you make 100,000, you invest 100,000, you don't have to pay taxes on it. 75% of that investment comes off your ordinary income. So that's like getting a 30% return on day one. It's like, for most of our investors, it's like Uncle Sam saying, hey, you know what? If you invest 100,000, really it's us letting you keep 30% of that. So you're kind of all in at 70, right? But now you're cash flowing, like we're projecting north of 10% and north of 3x equity multiples in the energy space right now, because it's a really good time, right? And so, but you're now investing somewhere where it's cash flowing and appreciating in a completely different market cycle than real estate and these others. So that's really what kind of brought that progression, is like, hey, look, my investors are not as diversified as I am. You know, there are other mechanisms. Let's package them so we can reduce the risk and allow for better diversification. And it's been received incredibly well.
Yeah, that's fantastic. And I can tell by the way you're explaining it that you help people to feel that comfort level, and that they realize that you have done your research and you're going to that you're giving them good advice.
Well, technically, I can't give advice. I'm an engineer, right? I got a master's in engineering business, been doing 500 million in real estate, about 200 million partnered on diversified oil and gas wells. I'm not a CPA and financial planner and attorney, so this isn't like financial, legal, or tax advice. But obviously, I've been out there and I've invested, and I've had my elbows, knees dirty, grinding it out for many years. And if you read my passive investor guide, which is a free download on my website, it talks about the distributions. This whole time I've been building this portfolio of real estate, right? That's like the 5th slide on my passive investor guide on my website, investonmainstreet.com. It says the diversification of the middle class is like 8% in alternative investments. 8%. Yeah. The diversification of the high income earners is 25% in alternative investments. And then the ultra wealthy is 50%. So if you want to start investing like the high income and ultra wealthy, you got to look for more than just real estate. Real estate's a sliver of that, right? Yeah. Warren Buffett just dropped another 11 billion into Occidental just in the last year. Robert Kiyosaki, Rich Dad Poor Dad, investing in North Dakota and Texas natural gas and oil. Elon just said we have to start investing in natural gas and oil. It takes 800 barrels of oil to make a Tesla. 38% of the electricity in the country is burning natural gas. It's an essential need. The EV vehicles are straining that. We need to supply it for as long as it takes for renewables to take over. We're not betting on it. We're just betting against Venezuela, is where Biden's trying to pull it from now, or OPEC, which is now trying to control our economy, or Russia, which all of these countries would like to see us destroy. Us producing it ourselves is not betting against green. It's just saying, let's get us through, and let's continue to invest in green energy. But even the green energy companies, everything you're sitting in and looking at and on is made of or with natural gas and oil. Yeah. And it takes natural gas and oil for our country to move forward today, and to produce products that provide progress towards greener, more sustainable energy. And so that's just basically my message, but there's other kinds of alternative investments, and we're bringing on more, but the best right now is to get into natural gas and oil drilling, and to do it in a secured way where we're buying known reserves, we're value adding, we're drilling in known locations, we're doing it at scale, we're doing like 40 wells instead of one. So if we miss on one, it doesn't matter. Like if a unit burns or there's a flood in a large apartment building, it doesn't matter. It washes out in the economics, right? Scale, diversify across multiple states. So the diversified energy funds gives you all that, right? And that's why we think it's a good alternative, complementary approach to real estate investors or those with high income earners that just don't want to pay Uncle Sam taxes.
Like, who wants to pay taxes?
I like the wealthy, they invest to not pay taxes, right? So
exactly.
And that's what they're doing, right? In fact, that Occidental Petroleum play that Warren Buffett made, he's getting a mini X tax write-off on that. So it's just the old school stuff. I'm not doing anything new. Well, I'm packaging things in new ways to decrease the risk. We're not drilling out in the middle of nowhere and hoping that, but we're packaging things in new and unique ways. It's a new fun model. But the ultra wealthy have been investing in workforce housing, multifamily, and storing their capital there for centuries. It's the lowest risk, I believe, in risk adjusted return. I think, but also in natural gas and oil, they invest in there so that they don't pay taxes, right? So why not us too, through pooling investors' capital and syndications, we can also participate in that, right?
So
so
are you actually buying the companies that are doing the drilling, or you're buying oil and gas rights and you're actually doing the drilling?
So in order to get the tax write-off, you actually need to be the operator. So I'm part of the organization that actually does the natural gas and oil drilling. And when you invest, it's a $200 million fund. You get a piece of not only, and this is what's new and unique about us, is instead of just every other natural gas and oil drilling deal that I've seen, every single one that I've seen, just puts you in one well or two well or three well, and you only get cash flow if it produces, right? You don't have any upside. That's like saying in a multifamily building, we're going to put you in 1 unit or 2 unit or 3 unit. If we are successful in building those units and renting them, you'll get cash flow. But you won't get any of the upside because that cash flow is appreciated the building.
Yeah.
When we sell, your cash flow is going to end, but you don't get any of that upside, right? Which is so strange, right? So applying the real estate principles, we're going to purchase a lease on known proven reserves, just like how we build in places around buildings that are producing income, that have value. In real estate, we're going to produce a lease which has adjacent wells producing. Mm-hmm. We have tools like 3D seismic to say, okay, this pancake layer extends through here. We're going to buy this lease and we're going to continue to farm, mm-hmm. right? Sequentially drill lots of wells, and we're going to do multiple leases in multiple states. And we're going to buy some that will look for natural gas and some that will drill for oil. And that way we have a 50-50 split, and we can be riding and pivoting between these two. And that allows you to participate in the cash flow of all these wells, just like all the units in a multifamily building. Mm-hmm. It allows you to participate in the security that as we've drilled, we've appreciated these leases. So we get to sell at a multiple, just like how we sell at a cap rate multiple in multifamily. And that's how we have an exit, a 3 to 5 year exit, where every other oil and gas deal that I've seen, every single one, they're forever cash flow. You invest, you don't really have an exit, you can't trade forward, and you get a penalty if you went out in like 10 years, 12 years. We can 1031 in oil and gas to the subsequent deal, and then do another one to raise your appreciation, raise your cash flow position. Like that's a huge mind-blowing thing. You can 1031 exchange just like in real estate, because you're investing alongside of the government.
Right.
And there's exceptions to the code to support domestic production of natural gas and oil to energize America, just like housing. So you can build a legacy wealth through the most powerful tool available to Americans, the 1031 exchange. So you, just like in a multifamily deal, you buy, we value add, we improve, you get cash flow, we exchange it forward, right? We buy, we value add, we improve, we exchange it forward. So that's kind of the gist of the approach.
Yeah, that's revolutionary. That's fantastic. So Patrick, how, like realistically, people who want to get started in this type of investment, people who want to invest with you, what should they look like? What should they how much should they have for disposable income? How much, is there a minimum for the investment in the various funds? How do you work the mechanics of it?
Right. So I started my career in working with high tech individuals that had put up a lot of money for me to build custom equipment, founders, executives, and high income earners. Right. So I started my business 100,000 minimums to what are called accredited investors only. That would be 200,000 in income for the last 2 years, 300,000 when combined with your spouse for the last 2 years, million in net worth, but not including your personal residence. Now, those arbitrary checkboxes, if you meet one of those three, not all of them, just one, the SEC says, yes, you can invest in Patrick's deal. And if you are able to invest at our minimums as well. But again, you can unlock your retirement account to help carve out a piece of it to better diversify. You could sell real property in 1031 exchange in a large apartment buildings with us as a partner. We accommodate 1031 exchanges as well if you want to get out of your landlord toilets and trash.
Yeah.
Second half of the year, you're going to be able to sell your rental property and then trade it in, or land and trade it into a natural gas and oil deal. We're working on that vehicle, which is going to help people even further diversify at a time when real estate's down. Mm-hmm. But if you don't meet any of these requirements, you don't have retirement accounts, savings, brokerage, properties or whatever, or you're not accredited, still reach out, because it's like a chicken before the egg thing. You got to get started somewhere. I wouldn't be able to be here telling you openly about our investments if I allowed non-accredited investors, because you can't openly, they call it solicit, and talk about your investments.
Right.
If you allow non-accredited investors. I have a bunch of friends that do this, but it's all like, networking and forensics. So if you set up a call, I can pass you along to them. You can't invest in their current deal, we can invest in the following, and they have lower minimums, and non-accredited investors can participate. The SEC does make our specific ones, kind of blockades them. It's a $200 million fund, so it's hard to bring in small investments into those. And me still have the conversations with. I love building relationships with investors, and I write for Forbes. I do podcasts like this. I just got done speaking on stage, 700 people the weekend before last. I love that. I love talking to people.
Yeah, I
wouldn't be able to have those conversations if they're investing like Grant Cardone, $7,000, $10,000, but he doesn't talk to anybody.
Right.
So you got to kind of decide. I like to invest in my investors, and in return they invest with me. So that's how we're basically structured.
Well, and it's also will start the journey of education, right? If they go on your website, there are a lot of aspects of the whole investment that they could learn about as they are going along that path of becoming an accredited investor, right? So you don't want to say, oh, I just can't do it because I don't have enough money. You want to start thinking like a person who has that much money, so that eventually you'll get there, right? I mean, that's how I feel about it.
100%. I mean, everybody starts somewhere. I didn't start accredited, right? I was a scrapping, hardworking engineering, snot-nosed engineer, right? Working my way through, and I made it. But early on, I got some good advice, and I started researching. I started learning. I read Rich Dad Poor Dad. I read the cash flow quadrant. I started learning how to save. I started learning to buy for cash flow and income producing assets. And then I gambled it all big and lost it all. So that was probably the biggest learning experience. And I came crawling out of that years later, and made my way back in much more humbled. And so start soon, and you'll hopefully take a more tried and true path than I originally did.
Yeah, buy the knowledge instead of having to experience it all on your own.
Right. Mm-hmm.
So Patrick, tell us how folks can get your book.
Right. So I tend to be the engineering type, keeps my head pretty close to the grinding wheel and get the work done until I started finally getting out there. And one of the first things that I did, Russell Gray, the real estate guys, told me I should go join a book with some pals. And so we have this drug. It's called Persistence, Pivots, and Game Changers, Turning Challenges into Opportunities. And here I am there with hair still, but I have a newborn in the other room, and so
there I went with it.
Just before it, actually, just anticipate. And so Brian Tracy did the forward. Phil Collins, the guitarist of Def Leppard, NFL, NBA players. There's a handful of people that wrote chapters. I wrote my chapter, told my story, all of it. How we ended up bouncing around through. My wife does production animation. I'm in high tech, doing real estate, the journey, how we ended up in Hawaii, how we ended up back here, and it's really cool. It was a really fun project. So many great people telling really fun and very unique stories. I'd love to give away a copy. The secret link is investonmainstreet.com/book. You have to type all that in. And if you go investonmainstreet.com/book, and if you use a promo code, what's the promo code we use for that?
We'll make it GYF for Get Your Fill podcast. So GYF is the promo code. Yep, GYF.
Okay. You can do either one, GYF or the full podcast name too. Okay. We'll do both of those. If you type that in, put in your information, I'll send you a signed hard copy for free. Just investing into your journey. Happy to do it. For anybody that's interested, like I said, there's a lot of inspirational stories in there. Believe in the content. But we also, on our website, take the time and investonmainstreet.com. Right at the top, we have videos on how to invest like the wealthy through energy, diversified energies. Right there, we have how to invest in large apartment buildings, and a lot of really cool videos, a lot of really neat stuff. Why alternative assets, and why the passive investor guide's game changing for me because I'm a kind of a data nut, lots of charts and graphs and pictures and stuff. So love to participate. I have lots of live webinars I've done on there. Participate in your journey however I can. Set up a call. investonmainstreet.com/contact. My email is patrick@investonmainstreet.com. Not complex. Happy to help how I can.
Thank you, Patrick. That's fantastic. And I would urge you listeners to take advantage of that, because even if you feel like, oh, geez, I don't have $100,000 right now. If you don't start thinking about yourself as someone who could potentially be this kind of investor, and you don't start to learn about your various options and opportunities, you may never be that person who has $100,000 to invest. So today's the day to start your journey. Patrick, is there anything you wish I would have asked you that we haven't touched on?
No, my general, if you read my Forbes article, all points towards, partner up, right? And that's what I did. I try to keep control over everything for so long. I was like, I'm so good at engineering. That means I'm going to be good at real estate too. So it wasn't until I learned to partner and I started buying through partnering, investing in larger, more diversified and lower risk investments and energy and large apartments, that I found my way out of the rat race. And so I just encourage people to take that leap, learn that skill, work out the partnership muscles. You'll be able to do your superpower, what you love doing, what you're excited about, it gets you up out of bed in the morning. Find people that want that piece of you or that need that piece of you. Yeah. Instead of trying to do all the jobs, which you're going to be making grueling and miserable. So
exactly.
Yeah.
Yeah. Who, not how. That's my favorite expression now. Who can do this for me? Not how do I do it myself?
I was just on a webinar earlier this week with Dan Sullivan, author of that. It was great. Love it.
Yeah. Excellent. Thanks so much, Patrick. You've been very generous sharing your knowledge and all your resources with us. We really appreciate it. Thank you, listener, for being with us today as well. And I'm sure you gained a lot from Patrick. So make sure you share this episode with someone who who needs to start thinking about themselves as a wealthy and successful person, or even better, someone who already is. And be sure to be here with us next week.
Thank you so much.
Thank you.